Hey, Dan Passarelli here. Happy Thursday. I hope you're feeling great today. Today, the S&P 500 tried to push down a little bit. The SPY was down over $5 at one point, closing only down about 250. That's 0.4%. And that's because we had a whole slew of stuff to talk about today, including and especially we had Walmart's disappointing outlook, fueling concerns about economic growth. Not to mention, we had some Fed speakers doing their bit, and that had the market sell off just a little bit. And of course, continued worry about the tariff situation. Now, the tariff situation yesterday really caused Palantir to drop considerably. That news came out about 20 minutes before the close yesterday, and it just really sold off hard because, that's not actually a tariff situation. That's Trump saying that he would be considering cuts to the military's budget, and Palantir supplies a fair amount of, that's a big part of their business, is selling to the military. Another one was RCL, and that was also a tax situation that Trump said that he may be taxing some of these cruise lines and such. And what does all this really come down to? A lot of uncertainty. Really, what it all comes down to is the volatility of volatility. So this is a chart of the VIX, which is the 30-day implied volatility of the SPX. And man, it's all over the place. If this was a stock, this would be keeping you up at night. This would be giving you nightmares. But what this is the normalized price of options. I mean, here we went from the 12 handle to a high 20 handle, and then back down a few days later, back up to 22. I mean, it's really all over the place, which makes trading interesting. We look for these opportunities when implied volatility is really high for option selling situations, and we look for opportunities when implied volatility is really low for option buying opportunities. I've said several times, really over the past year, that trading straddles has become a much more interesting situation. Well, these times when we get down below like the 15 handle, that is the time to go into, at least for me personally, not necessarily for your situation. I don't know your situation. I'm talking in general terms here, but I like to get into straddles with about 30 days to expiration because it's hard. I mean, we haven't seen a 30-day period where implied volatility hasn't spiked. I mean, this is a 6-month chart. There wasn't one here, I don't think, right? So I hope that all helps. This is Dan Passarelli, Trade Smart.